welcome back. You're watching London Eye, and I've been in conversation with Divya Mathur, Portfolio Manager at Martin Currie. How would you rate the performance of the Indian government from an economic policy point of view over the last couple of years?
I would think overall the performance has been good. I mean, as you're aware, markets get very excited. They can think a lot about the future in the very short term, and post the election results just a couple of years ago, there was a lot of expectations. I think and everyone has been realistic about what can be achieved and what can't. There's been a number of important bills that have got through India. There's obviously still some that need to get through. But overall, you know, I've been quite happy with what we've seen in India. And again, in the relative context, if you look at again what else is happening in emerging markets, a number of governments facing a number of challenges. The Indian government has executed well. The central bank has also executed well, gained a lot of credibility, and these are all positives, and some of these positives, they may not come in the short term, but the positives will eventually come through. And one certainly gets the impression that the Indian government is trying to create a foundation for longer term and sustainable economic growth, which, you know, is important within the development of an economy.
You mentioned the central bank's credibility as well. I mean, there's a debate raging in the country about whether he should get another term or not. As a global investor, would you put your weight behind the RBI governor, Raghuram Rajan, and do you think markets will be happy or disappointed if he were not re-elected or reappointed?
There may be some disappointment, but you hope that in terms of some of the policies and the mentalities that he has put in is not just at his level, but it's across the bank. So one hopes that, you know, as we hope with the government itself, that this is not just about one person, but in terms of the beliefs and the policies, and making sure that those beliefs and policies are followed by others, rather than just being at the mercy of just one key individual. I mean, I'm sure short term the market would be disappointed, but we would like to think that the measures we've seen over the last few years are more sustainable, rather than just disappearing as the central bank governor would disappear.
What are your thoughts on the Indian banking sector and the trouble that we've been wading through with non-performing assets out there? I mean, there's been a lot of disclosures, but do you think we are past the hump out there? And would you even consider looking at some of the beaten down public sector names which have really come out with ugly numbers over the last couple of quarters?
I think for any sector, I mean, across any country, when you have a process where you are having to adjust to reality, it's going to be difficult and it's going to take time. And I think that's where we are with the Indian banking sector. I think you've seen the bankruptcy bill that's come through. Again, it's not a short-term benefit, but it's going to be a longer-term benefit. Some of the measures of just cleaning up the bank's balance sheets, this will take time, but certainly I think the direction is right, and that is the main thing. It will take time. Obviously there's a tendency to focus on the private sector banks, but we would look at public sector banks. We need to be comfortable just in terms of their assets, the disclosure, how much pain they are actually realising. But we would certainly look at some of the large private sector, the public sector banks within India.
What are your thoughts on the export sectors, information technology and pharmaceuticals? Once been a muddle along performer with some outperformers like Infosys, and on the other side we've had some real bloomers in the pharmaceutical space. After 2 or 3 years of great outperformance, many share prices have tanked in pharmaceuticals over the last 1 year. What are your key holdings and approach for these export sectors?
Yeah, the Indian IT export sector has obviously been one of the successes over the years, with a large number of corporates who have done fantastically well. We actually don't own any names in that space, but I have a lot of admiration for the likes of Infosys and TCS in terms of the progress that they've made just globally within the space. growth is slowing. I think this is one of the realities, certainly within Indian IT, is we've got so used to this headline growth rates of industry growth rates of 20% plus that we are seeing that adjustment come through as the industry matures. There are other companies which are gaining prominence within IT service exports outside India. Some of the emerging European companies are gaining traction, and they are not trying to replicate the Indian model, but they're just focusing on certain parts of the Indian model, which is causing some slowdown, I feel, for the likes of the Indian heavyweights. But you can argue that this is an area where we will always need to spend. You know, IT services just globally is an area that needs to always be money always needs to be spent on, and that should create opportunities for that sector. I feel the challenge is just changing with the way the market is changing. So as we move away from the legacy IT systems to the new digital IT systems, companies need to manage that change, and that's the key of a good technology company. Sometimes you don't know what the technology is changing to, but as long as you can make that change, you will be successful. And I think we're at that situation with the Indian IT sector. Is the change is happening, the Indian IT companies are making that change, growth rates have slowed, but ultimately I do think those Indian IT companies will be successful in making that change.
Are you a believer in the recovery story that's playing out in terms of stock prices in the commodity space, commodity stocks? I mean, steel stocks have gone up tremendously, betting on the capex in China or capex recovery in China. Is it too risky a bet, or are you inclined to follow those kind of movements?
I think capex recovery in China, if it does happen, it will not be like it's happened in the past. I think one of the areas which the Chinese government are uncomfortable with now is major stimulus packages or programs into the economy. I think the Chinese realize reforms are also needed. So that will always curtail the whole fixed asset investment that you could potentially see into China. Now, the Indian recovery is expected to happen. The extent of that recovery is uncertain, and I think that's the problem. And when I would, if I'm to look at cyclical names in India, and I would compare steel names with maybe cement names, we look at the outlook for the end commodity or the end product, but we also look at the industry structure. You know, what is a good industry structure for a shareholder to make a good return, and again, what is the sustainability of that? So that's what's important, and certainly within India you could argue that the cement sector may have a more favourable outlook on some of those factors that I've measured, say, versus the steel sector.
What do you hear when you speak to some of your larger investors, institutions who look at emerging market investing? Are they putting in more money to work at emerging markets, or do you sense a tinge of disappointment at how returns have panned out, adjusted for currency over the last 5-6 years?
Yeah, I think when we talk to clients, potential investors, I think there is a disappointment obviously in the historic performance. But that's what it is, it's a historic performance. And what we're trying to tell the clients, potential investors, is that, first of all, we talk about emerging markets. It's a collective name given to a lot of countries which are all at various stages of development, of political development, of economic development, and stock market development. So what we're trying to highlight is the importance of investing in the companies. The companies are just very important. Obviously the environment we need to take into account, but at the end of the day, certainly the companies can create opportunities anywhere and everywhere, whether that be within emerging markets or emerging markets companies doing well in global markets. So it's always making sure that we have an investable universe of names that we can invest in. And what we can find in emerging markets, and there's plenty of names in India as well, are companies which can and have continued to grow even though the environment has been difficult. And that's the type of names that we will focus more on. And if we can get a better global environment or a better emerging market environment, that's even better. But for us, it's always bringing it back down to the company and its opportunity and seeing can that company grow even if the environment is difficult.
Divya, a pleasure talking to you. Thank you very much for your time today.